Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Thursday, January 28th. Okay, it's 5 o'clock a.m. as I'm starting the video. We are down in the pre-market. We're currently bouncing off of the initial lows off the open from the 4 a.m. open. At that point, the low this morning, the Qs were off about 1.3, 1.4%, and SPY was off about 1%, and IWM just a little less than 1%, maybe like 0.8%. So we're bouncing right now. We'll see how that proceeds, into the regular hour open at 9:30. But I wanted to get up early to kind of see where we were at and put together a video so you can get your levels well ahead of the opening, so you'll have some nice trades or trade locations to look at as the day unfolds. And if you watched yesterday, the video that we did, there were a lot of real nice objective, clean entries, and I'm going to point those out this morning, just for educational purposes, not to, I hope you took them, but if you didn't, I still want to review it. I think it's a good learning opportunity, because if you aspire to be a good trader, I think you have to learn to trade both sides. Be bullish when it's bullish, be bearish when it's bearish. And in that way, you're not wishing and hoping for one or the other. You're just going with the flow. And I think if you go with the flow, it's easier trading. Now you got to recognize the flow. Are we bullish? Are we bearish? But when these days come where you get a rug pull, and if you know your levels, you shouldn't have any hesitation from an operational standpoint, what to do versus when it's in a bull market, what you should be doing. So, because losing levels from above is bearish, and recapturing them from below is bullish. So that's where these pivot points come from. Now, what I've done here this morning is approximate the open with the pivot levels. We don't know if it's going to sell off more or bounce from here into the opening. So these are just reference and guideline levels, because, a lot can change in 4.5 hours. So let's take a look at it. We had been in this channel. This is the SPY 2 hour. We had been in this channel. We had the gap down opening. And then we lost this trend line. We lost the channel low. That in and of itself is a sell signal, right? You're in the channel and then you lose the channel. That's a sell signal. So we come down. We try to make that the initial bounce. And they bounced it for a back test, almost a perfect back test of this channel. So if you were flustered right here out of the gate, maybe, a little unsure what's going to happen, are they going to pull the rug? Is this just is it going to bounce off this channel low and go higher? So you missed it. Or you tried a long here and you got stopped out immediately. When price came back up to back touch the bottom of the channel, that's your objective short, with a stop just above, in the gap. So then it sold off, found some support in this 376.50 area, bounced into this 378 and then let go again. So depending on how you played that, there was quite a bit of travel there. At least, well, $7 was the total, because it went from 380 down to 373. So maybe you got a portion of that. Maybe you got half of that. Still a good trade. So today in the pre-market, we are down somewhere in between 371 and 373. I think this 373 level is your pivot on this time frame. Below that, I think you should be bearish, looking for a move down to 368. Notice that 370 is where the daily 50 EMA is. So there may be support right here in the middle where you wouldn't think there would be any. But if that fails, then for sure down to 368. And notice the large volume over price bar here. So that's going to be VOP support, 368. I've laid the fibs on the move, and you should do that as well, because if 373 is recaptured, what would that mean? That's a buy level. If they're going to put in a big bounce and they bring it down off the open and come back and reclaim that level, 373, you can get long there. And then you've got your overhead targets. The 38% fib level lines up really well with these lows here on these candles. And if they want to take it up a little more, up to the 50% halfback fib, 378. To me, that's the bazooka short level, and I've got that identified here. Why? On the 30-minute chart, this is the largest volume over price resistance, on the chart right here. So 378 should be very stiff resistance. If they bounce it, try to come back up, I would be a motivated seller there. I'm not sure they have the horsepower to do it, but that's what you'd expect on a a common Fibonacci bounce is 50% of the initial drop, bring it back, and I would be, like I said, I would be a seller there at 378 with a stop just above, and then see if they come back and test the lows, right? So very common move, by the way. Make that initial plunge, set a level, bounce it, then come back and retest it. And that's really when you know that, is this just a one-day wonder where people were taking out risk? Or is it something more that they sell it off, they bounce, but it fails, and then you come back and take out this low? Then you've got the start of a series of lower highs and lower lows, and that defines your new downtrend line. So right here is our first lower low. Here was our first lower high on this bounce. So here's your initial low. Here's your initial high. Come down here. There's your lower low. Then if they bounce it up here to 378, that's your first lower high. So then you've got that series going down, and then if they take out 371 or wherever that opens this morning, then you'll have your next lower low. Let's move on to the Qs. The Qs are in a little better technical shape actually, because it's still within this channel. Now we lost the midpoint, and in the pre-market we are down around 316. That's why I have that the arrow there. I think 316 is your pivot. Why? Because it's the bottom of the gap and the bottom of the rising channel. If price breaks below 316, that's a sell signal. You can get short there with a stop just above, and then look for these levels below. Now I will tell you that there's a decent amount of support in here. Notice the volume over price bars. There were a lot of trades made between 316 and 307. A lot of congestion in here. That may be a tell for us going forward. Why? If it comes back in here, breaks below 316, but then finds support amongst all these trades, whether it be at 312 or 314, or even come down here to fill this gap down to 307, that's a manageable decline, and we can certainly trade that. But you break below 307, then it starts to fall away pretty quickly. So there may be another leg down here today or in the days ahead. 307 is going to be a very, very important level. That would repair all these gaps. It'll fill them, and maybe they find some solid support down here at 307. I wouldn't be surprised today if they broke it down low, say to 312, bounce it back up, and then sell it off this afternoon. We'll just have to see. But these are the levels. Key off at 316. If that holds, you've got an objective long. If it breaks, you've got an objective short. Here are the Qs. With the exploded view of the levels and the gaps and all that kind of stuff. What I want to point out here is what kind of trading opportunities could you have looked at yesterday. We closed here Tuesday, right at the top of the range. Gap down. If you weren't in, you can't take that trade there, right? But what you could have done is key off of this 325, which were all these prior lows. And you could have said to yourself, you know what? If we lose 325, these prior lows, we're going lower. Get short, and you got a fast $4 down to 321, where you would have had to decide, where do I want to cover? But you had an opportunity there for $4. Then they bounced it, came right back up to the opening price at 326. Okay? Came right back up to the gap that formed after the open, where it failed. So as an active trader, this was a key level, the open. Whenever you have a gap, you should mark that level because it's important. Often price will try to go back and validate that level. Sometimes, they'll break above that And that would be a buy because it recaptured the breakdown candle and go on up and fill the gap. So key off of that level. And if you had that awareness and you were ready, that was an objective short because it could not recapture the breakdown candle high, could not move into the gap, then backed away. Your validation, if you got short here with a stop just above, your validation was breaking back down above below this 325 on the way down. That would have been a place, if you didn't mess around up here, re-short 325, then you got $3, you got to bounce back up, and then you got the big move to take out the low. And this 322 that's been on the board, that was another selling location. Why? Well, it was a pre-identified level. Number two, it was a prior low. You broke from above, you broke the level, 322, and you broke a prior low. So that would have been a place to either initiate a new short, add to another one, or a place to roll down your stops had you gotten short up here. So you start with a stop just above 326. You got short. You broke the next level. Then you could have moved your stops down to just above 322. So there were some nice trading ops there if you were on top of it and recognized some of those keys. IWM. Gap down, came down to this 207 level, then they bounced it all the way up to almost close the gap up to this 312.50 area, and then they sold it off again. This I tried a couple trades in here. It's a little tougher than it looks. You know, I basically just, I don't know if I even made a little or lost a little, but there wasn't the travel that there was on SPY and QQQ, so it was a little tougher. Now this morning, it may set up as an easier trade. Let me tell you why. Trading at 207 in the pre-market, you get a break below 207. What would that mean? Well, it would mean you broke the prior low. That's a sell signal. You broke a pre-identified level from above. That's a sell signal. And you've got a volume over price air pocket right here down to 204. Now below 204, you're coming at 200 fast to test this gap and probably fill it. On any bounce, if there's a big bounce this morning up to 212, I'd be a seller right there, and with a stop just above. You could also, a scenario would be they break it below 207 and then come right back to recapture it. If they did that, that would be bullish, and you could get long there for a bounce. And they may take it as far as 212, which would be a great trade. That's $5. You know, when this volatility hits, if you're ready with the right levels on what you're keying off of on the various stocks you like to trade or track, you can make a lot of money in a short period of time when that volatility increases. Now, speaking of volatility, yesterday was the third highest VIX spike ever recorded. That's significant. That is significant. And I think that was in terms of percentage jump, not the dollars, but I think we were in the low 20s and we jumped up to 37. That's dramatic. And what we may see is another round of program selling, because a lot of these quants in these hedge funds, excuse me, have mandates that they can't be long when volatility gets to a certain point. So that volatility spike could set off some programmatic selling. And you've probably heard about all this Robinhood stuff and GameStop and all that kind of stuff. There's a lot of long short hedge funds out there, and just hedge funds in general, that are taking down their risk right now. And whenever you take down your risk, that's selling. And we've talked about sentiment, and positioning. Everybody is all in on this market. There's no shorts. We've showed that chart where short interest is almost at all-time lows. So there's not a lot of air brakes under this market, because the shorts would be the ones that would be buying to cover, etc. So if the hedgies continue to degross and take down their exposure level, that's going to turn into selling. So we got to be ready for that. 30-minute chart, just the same levels zoomed in. I think 207 is the key today. Above is okay to be bullish, but breaking below is bearish. And if they kick it back up here, I want to be a seller of that. And, if you get a paper cut, if they want to take, if that yesterday was truly just a one-day anomaly, and they take you out here at 213, then you got a paper cut. But I think this is going to go on a little bit further. I'm not some big prognosticator, but I think they're going to take it down a little lower. So I want to be selling into fib bounces versus figuring on, recapturing levels from below. Facebook. They sold that off hard yesterday, 3.5%. Some beautiful trade setups for you. We had talked about, price up here. Where was your first trade? Well, if you were super sharp, you could have said, you know what? I'm gonna get short against yesterday's high. And if you did that, you would have probably had $1.50 a risk. But that didn't last long and it broke down. Let's say you didn't do that. That would have been a tough trade, maybe a sophisticated trade, maybe a scary trade. The real trade was when it lost 280. We had actually identified that yesterday because that was a buy on the way up, right? We talked about that. Recapturing 280 from below was good for $4. Well, when that let go yesterday, that was your short entry. Lost a key level from above. What does that mean? That means this breakout was fake, because now you're back below the breakout level. And then that was good for $6 right out of the gate. 280 down to 274. You had an opportunity to manage your trade from that point. Either say to yourself, I'm holding for more, or you could have covered. But then when it broke back below 274, you got another $4 out of it when you sold 274. That was your second short entry. You got to move down to 268, where you could have decided, hey, am I going to hold overnight, or what am I going to do? Maybe I'll cover. This morning, we are down here at 266. That's another pivot level. I think as long as price holds 266, you can be bullish and hope for a fib bounce, back up into 270, maybe even 274, and then have it come down, roll over, or if they break it low out of the gate, we've got a gap at 263.60 down to 261, and then at that point they're probably just going to come down here and tag 260, and I would be covering there unless it's, there's a lot of momentum behind it, because if 260 breaks, then I mean, it's over. It's going back down to 255 and even 245. And remember, sorry about that. My mind got distracted. I'm looking at something here. They had a blowout quarter. From what I understand, I didn't look at it closely, but they had a nice quarter. Fading good news is bearish. There's no other way to spin that. They faded Microsoft. They faded Apple. They faded Facebook. They faded AMD. They faded Texas Instruments. Those are all good reports. You would have expected sizable bounces, but we got the opposite. We got sell-offs in the face of good news. That is bearish. So today, key off 266. Okay, let's ramp it up here. Apple. We're down here at 134. I mean, we're going to open down $8 off of a blowout quarter. That's not good. I think 134 is your pivot today. If this sell-off was an overdone reaction, you can get long against either 134 or this 133.50 at the top of the gap and see if they can bounce it. But I don't have them here. Put those Fibonacci levels on there, and I can almost assure you that 138 is going to be close to one of them. That's the prior high back here. I would be a motivated seller if they can bounce it up into 138. I think you sell there and see if it comes back down to test these lows. Tesla, pre-market, down here flirting with 800. You lose 800, you're going to come to the top of this gap at 773. As long as you hold 805, 800, you can look for a gap fill higher. So key off of this 801, 800 area at this prior low, and maybe the bulls can keep it in this trading range. And if they can do that, then you got a nice long entry with a stop just below to see if all this recovers and they can fill the gap up to 860, call it 865. What was it? I don't have it. It looks to be about 864. Sorry about that. Spacing out. I'm not awake, I guess. Microsoft. What was the trade? The trade was when it couldn't hold the breakout. 234 on that break. I mean, you could have shorted up here against the high, but let's just go with the levels. When you broke 234, that was your short. Came back down and ultimately gave you a touch at 230. It's got to hold 230. I mean, we are right there in the pre-market. You lose 230. You got a $4 move coming to 226. Alarm that level. And if 226 fails, you got another $4 down to 222.50. So Those are some very clear levels. And again, they're fading an awesome earnings report, and that's not right. That's bear market behavior. Amazon, this was a gravy train if you got this one, and if you did, kudos to you. Had a first reach up right here into the highs that got rejected. So if you got anything in this candle, you were golden. Came down here. Let's say you missed all that. Your second entry was here at 32.85. When that broke, that was your cue to get short, and you got a $35 move right down, then came back up to that level. Look at all the candles where it couldn't make progress. Short against that with a stop just above, and then you got $80, $85 down here to 3,200. So this morning in the pre-market, we're sitting at 3,200. I think you can be bullish above, bearish below. Big gap to fill down to 3,120. Be ready for that on the downside if we get into some heavy selling. Google, very nice trading opportunity. Gap down. But then when it lost 1870, that was your sell signal. And you got 1870 to 1820, $50 move. You could have covered against this gap, reshorted the bounce, but in either case, whether you held through all this or not, you had at least $50. And if you held the whole way, you even got this move down here to 1,800. And that's where it sits right now in the pre-market, this 1795. The bottom of the gap is here at 1787-ish. So you could get long here if it holds and look for a bounce back up to 1820. But if it really breaks down and loses the bottom of this gap, then you're down in the 1750s. And don't forget, they report on Tuesday, February 2nd, I believe. So keep that in the back of your mind in terms of, are you actively trading this and going to be out, or are you trying to do more of a long-term swing? Netflix, another beautiful setup that we had, right? Go back and listen to the video. I even said I'm bullish on Netflix, but don't think for a minute that means that this gap won't fill, because it can, and it's well on its way. What was the trade? We gapped down, but then you had a nice reach up candle. Look at that. See the wick right here? That's why I got the green box around it. Maybe it should be a red box, but you got a nice reach up to the top of the gap where, like returning to the scene of the crime right here. Lay on your short. Look what you got. Look what you got. I mean, what is that? $40? 565 to 520. I mean, come on. That's $45. That's a beautiful trade, and congratulations if you got it. I think at this point the gap will probably fill. If you price in the pre-market is here around 525, I would be looking to fade any bounce. I think this is going to go down and go ahead and complete this. So if you can find a good entry point, even breaking yesterday's low at around 515, that's still a $15 trade. I mean, that's not great. But if you got a bounce back into 535 at this 38% fib level, that's a nice entry. Okay, sector ETFs. We went through these yesterday. Materials. Now this is on a sell signal. You can be short against the 50 EMA, short against 72 with a stop above. Communications. Got a gap below to fill. If I were to extend this blue rectangle, a breakback below that today would call this breakout fake. And then I think your target will be 65. Energy, lost 41. I think you can be short against 41 with a stop above. And then look for a move to test the 50 at 39. And then the 200 at 37.75. Financials, gap down. We talked about it. Sitting right on the 50. If it loses the 50, it's coming down here down to 28.25. The real trade is if it loses 28.25, then you got a bigger move to look forward to because there's no support here. Nobody home. Void, price, volume over price, void. This is going to move fast. I would expect it to come down to 26.25 and then possibly fill the gap. Because here's the 200 right at the top of the gap. You're going to go down and test that if you lose 28.25. So a great entry idea. If you get a bounce back into here to fill this gap, that would be well worthwhile to set up a short there with a stop just above and see if it doesn't just roll over after the first bounce and then come back down to 28.25 and possibly lower. XLI, Boeing did a belly flop. That's the biggest component in XLI. Now I think you can be short against the 50 at 87, or if you want to tighten it up, be short against 86 with a stop above. I think this is coming down here to 83 and maybe even fill the gap to 81, and then here's your 200 coming in at 80. Here's the most important sector. Has not initiated a sell yet. Still within this channel, but as we talked about yesterday, 131 is the key. If you lose 131, you're coming down here to 127 at the 50, and then 127 becomes very, very important because below that, you're probably coming down here to 118 and maybe even to the 200. Staples, still inside this wedge triangle. Watch for a break below. If that happens, you're going to get a test of the 200, $2 lower. Utilities in this triangle as well. I don't think there's a real big trade to make here. Alarm 63.50, alarm 60.50, and you can take that trade if either one of those levels trigger. Big sell signal on healthcare. We identified the rising wedge yesterday. We talked about this 116.50 level. We took that out. Now we're below the pivot point. If you got short up here, great. Not so great if you're sitting here. I would key off of the 50. I would key off of the 50. If price loses the 50, I think you're coming down here to 109. But the 50 would be a logical place to get a bounce. And if you got that bounce, then you could put the fibs on the move and then look for the halfback short entry. XLY still above trend, no sell signals. A break below 165, a break below 165 here, put you on a sell signal. Your quick test here at 161 is the 50, and then possibly lower if that breaks. So a lot of stuff there. I see here I've been on for half an hour or 40 minutes. A lot of important levels. And let's just wrap up with this, because I want to say a couple things about this, this short squeeze stuff, the GameStop and all that. The trading room has been very active with that stuff over the past week. And I've jumped on a few of those. A few have worked, a few have not. I mean, it's trading. It's fast money trading. And yesterday, at the end of the day, one of the traders said, I'm wondering if all this short squeeze stuff is a distraction because I missed some good moves on the stocks I normally track. So got diverted, and then he missed some of his, bread and butter stock moves. And that's always a risk. Keep in mind that doesn't matter who you are. You only have so much bandwidth. And you as traders have to identify, where do I want to allocate the precious bandwidth that I have? Because if you walk away from your bread and butter because of these short squeezes and the allure of all that money or money to be made, you're making a conscious choice, because you're not going to be able to do both. You're not going to be able to track your normal cohort of stocks you like to trade. Now you're in another realm, and you won't be able to do both successfully. So think long and hard about switching your focus. I mean, it's fine if you do. I'm not saying it's wrong. But this one particular trader was asking that question. When does the distraction end and the counterproductive activity begin if you start doing a junky job on the stuff you're normally good at because you diverted your attention? So take those decision points seriously, because we can only do so much. And that speaks to why I continue to be interested in the FATMAAN names. They may be dormant for a while, but they're not dormant forever. And even through this choppy period, the last 6 months, we've done fine identifying levels and all that. And now we're getting even more intraday travel on these important names. And another thing I like about them is they're ultra liquid, got ultra liquid option chains, not a ton of slippage between the bid and the ask, so you can get in and out easily. That's important. I mean, if you lose 10% every time you enter or exit a trade on a non-liquid stock, you're making it really hard to make money. Actively trading something that has a wide bid-ask spread, it's very tough to do. So for me, I want to maintain focus as much as I can on the FATMAAN names for active trading, and then allocate the rest of my bandwidth for position trading, swing trading, and stuff like that. So let's wrap it up there. Long video. Since we're still 4 hours from the bell, I'm going to see if I can find some trade setups for you today and maybe put out another video before the open. Let's see if I can get that done. If you're new here and like what you've heard, please hit the subscribe button and the alarm bell, and you'll get a notice when I publish new video content. And if you jump over to the show notes, you'll find links to the blog site and a link to register for all my content. And that way you'll get an email each and every time I publish content or do a trade adjustment or have an idea or a thought midday. You will get that in your email box, and you'll also get an invite to the trading room. And we've had quite a number of new people join the room and join the group, so thank you very much. I really think that if you put the levels and the information to work that I present and focus your attention on execution, you'll become a better trader. Because, when we talk about bandwidth, it's also, part of your bandwidth is preparation. How many stocks can you truly prepare for? Well, each morning I'm giving you the indexes and FATMAAN. That's 10 names, 10 potential locations for trades. That can keep a lot of people busy enough, and mix in some swing trades with that. I think your plate will be pretty full, and you can focus on execution rather than finding setups and stuff. So have a good morning of trading. Have that trade plan ready when all these red bars hit. Maintain your center, maintain your composure, tackle the markets with quiet confidence and fortitude, and I think you'll have a really good trading day. So talk to you soon.